Haven't already. That is the OPEC meeting. Pete McGuire could well be there on the sidelines of that event. He is CEO of XM Australia. He's live via our Sydney CBD studio. Have you got your tickets, Pete, to that event? Or is it going to be a little bit of like the weather in Vienna, prone to cloudiness, if not haze?
Well, good afternoon, Carsten. I think prone to, a little bit of haziness at the moment. We'll know further about that towards the end of the week.
Well, and that's what's going to be pivotal about that. What, just a bit of dust settling on the US election, and with it, risk appetite on or off? Well,
exactly right. I mean, have a look at what's happened over the last 12 to 24 hours. We had an earthquake, of course, over the last couple of days in Oklahoma. And Cushing, it was right next to that region. So the crude market has certainly come under a fair bit of pressure over the last 15 or so trading days, and leading into where we are with the election. Have a look at the US dollar, what's happening as far as stocks, and of course the Baker Hughes that Mark just mentioned.
Again, you've got now the Western oil companies lining up. They're calling out Iran. And what really is the subtext here? What's the reason for both these players in frame again?
Well, you've got to look at that as far as gas and where Iran sits, the Gulf region, one of the largest fields in the world. Total are doing and strategic partnerships with China Oil and taking on board what they can actually do over the coming years, probably a 3 to 5 year window, and then naturally there'll be further uptick from there as far as pipelines leading and consumption from China and so on. So strong strategic partnerships. You'll see more of that coming over the coming years, and we're probably only in some eyes 5 to 10 years from maximum consumption. With the thoughts as far as different forms of energy coming on board for motor vehicles and other forms of transportation, gas-powered, and of course, it's going to be a very interesting point, 2025 onwards.
Elon Musk, is that what you think? You think the energy cars, the green cars will be the ones in the next 5 to 10 years? You think that evolution will be that quick?
It might take a little bit longer than that, Mark, but I'd say probably 10. With the likes of Elon Musk, no doubt Toyota, cheaper vehicles are coming online all the time. If China gets behind it, and I think India, of course, what's happening as far as, you see some of those pollution and New Delhi, they're going to be big consumers, South America. So I think the big movers will come on. Cars will be a lot cheaper in years to come, and it'll just be the natural flow of a market.
So, Peter, if that's the case, and if you're right, what does that mean for the equity raising that you were talking about the Saudis were about to do?
Yeah, well, they're looking at, of course, bond raising and then the IPO in 2018. That's probably why they're moving forward on that. Revenue numbers from sovereign wealth and all of the big players are well down as being evident, and that's one of the reasons for this move for November 30 to cut certainly production, but more or less to try and enforce prices to be through that $50 level. So they're being played at both sides. You've got US dollar, you've got America producing more than ever, and of course what's happening from global consumption and new energy frontiers.
Peter, John Milroy from Lord Manette.
Yes, John?
You think the meeting on 30th November will get a result and get these production cuts through?
Well, it's going to be a hard one. I mean, we're the Saudis. Saudis are, the figureheads, as we all know, and they need to act accordingly. They'll look at probably cutting their production down another 100,000 barrels, John, to around about 540,000 barrels from their peak. They've been producing this year at record peak, along with Russia. There's talk that they're going to allow Iraq to go to around about 4.7 million barrels a day, but certainly not Iran, nor Venezuela, or any of the other major producers. So in turn, that's going to have a conflict, and it's where Russia sits as well. So I'm not necessarily sure that you're going to see a confidence moving forward going into, December, January, February. But at the present time, OPEC have got to look as though they're banded together, John, so it's a bit of a wait-and-see approach.
Thanks. Peter, do you expect it to be a civil conflict, or do you think some of the challenges in the geopolitical story is that we've had some really scary events where, people have taken to arms for different reasons. Do you see it as being something that'll evolve over time? Because we're talking billions of dollars.
Well, we are.
That you might be worried about the ramifications in terms of the geopolitical mix?
Well, possibly Nigeria, but when you're looking at that Arab Spring and what's happened there, Mark, I mean, you know, you look at Egypt and what we experienced there going over the last couple of years, that whole area seems to have quietened down a fair bit, though it can turn in a very quickly. Libya even, the concerns there seem to have abated. Syria is still an ongoing quagmire. And, of course, what's going on in, some regions of Iraq. But it's, again, the Middle East has been a hotspot for many, many decades, if not centuries, and probably that will continue. And whilst you've got oil and you've got, those natural energy sources coming from that region, I'm sure you're going to see geopolitical concerns.
Pete, Mark's view on developments out of the Dalian Commodity Exchange was that the horses bolted. This is in relation to limits, trading limits for coking coal, some 9% kicking in as of November the 8th. Also, margin trading limits alongside it, so doubling the non-intraday transaction fees for both those commods, raising the margins as well to 11%. Is that going to do anything to crimp these giddy prices?
Well, probably slow it down a little bit. We saw that, a couple of years back with gold. We saw it with crude oil. It's not unusual for futures exchanges to raise their margin requirements. More importantly, we've seen a strong push-up, 140, 150% for coking coal over that last 5 months or so. So taking that awareness, futures traders need to be very conscious. They're playing with leverage, and of course they can get, if they're on the right side of the trade, it can be wonderful. On the wrong side of the trade, and you can lose more than your shirt.
Well, a moral about losing your cool over any holdings in gold with the Brexit fallout as your guide. Let's just maybe end on this one. What's the moral there about timing?
Well, it's 1304, 1305 the last couple of days, Carson, and then it's certainly back now. We've dropped a couple of percent. I think that, dependent again, if Clinton gets in, I think that gold will come under a little bit of pressure and it'll be a 1250, 1240 sort of trade. Energy will probably move stronger. US dollar will increase and stock markets. But let's just wait and see if Trump has a late resurgence and the market is as wild as ever.
Well, John, you're on Fox Poll Watch unofficially on the desk tonight. What are you hearing on that measure? 'Cause it seems as if there could be exactly what Pete was saying.
We're just still stuck in Dixville, although there is some changing the map that Fox is speculating about. But it's early days, Pete. I think we'll have to wait and see for another few hours or so.
Absolutely, John. I think 24 hours time, I won't be surprised, but I'm not a betting man.
OK, Pete.
Trump's still $3.
Yeah, right. OK. Watch this space. Talk to you soon. Thank you as always.
Thank you very much. Thanks, Carson.
Cheers,